Well, obviously it has been a more challenging environment for long duration equities, and sustainable investment would certainly fall into long duration category because we are trying to address some of the sustainability challenges over the next 5 and 10 years and beyond. And actually just purely mathematically, if you look at how inflation has really jumped up so far this year, obviously the response to that has been to raise interest rates. And of course, when we have interest rate rising, it naturally penalises the long duration assets more because you've got future cash flows which get discounted back at a higher rate. So certainly there has been quite a lot of pressure on some of these long duration equities so far this year. I'd say countering that at the moment, I think we're all very aware at the moment that kind of if you look at some of the latest economic data, we're seeing a very, very sharp slowdown in economic growth. So I think kind of in terms of general market concern, yes, it's been dominated by inflation concerns and the impact of interest rate rises, but I think growth will increasingly become the concern over the next few months. And I think with headline global growth declining at such a rate, I think those pockets of growth that still exist in kind of quite a growth-starved world will be sort of increasingly coveted. So I think that particularly after the de-rating we've seen in certain sections of the sustainable investment arena, I think kind of that increased focus on those pockets of growth will start to come through. And I'd just say kind of one thing that sort of really helped in terms of global opportunities and Impax's funds in general is over the last few years we've avoided investing in companies that we believe deserve the title of hypergrowth, and these are companies that have grown their top line incredibly quickly over the last few years, but without delivering any profitability yet. So companies that might turn profiting free cash flow positive in a few years' time. And if we look at the performance of stocks so far this year, we can certainly see that those companies that fall into the hyper growth bucket have been the ones that have been really punished in this interest rate rise environment. Some of the share prices of the likes of Peloton, for example, are down 90% and Oatly down 85%. And I think it's been really helpful that Impax has managed to maintain its valuation prudence and avoided those sort of issues. In terms of the environmental standards themselves, where it's appropriate, we look that the company really tries to lead its industry in terms of its environmental disclosures and practices. And the reason why we do this is not just because it's the right thing to do, it's also because from a pragmatic perspective, I believe in these days of social media and connectivity, I think companies' misdeeds in terms of mistreating the environment spread incredibly quickly, and companies cannot get away with malpractice in a way that they did 10 years ago. It will soon appear on social media and the damage that they can do to reputations. So again, just to the point that unless you take care of your ESG standards, you pose material risks to your company. Absolutely. So a really key element of what Impax does is active engagement with the companies we invest in. And what this essentially means is we engage with the companies we invest in to try to understand how they manage some of the material risks they might face. And different companies in different sectors face sort of different risks. But in general, some of the risks we will raise with companies recently, one would be on cybersecurity. We see cases of cyber hacking happening all the time, and generally what we're seeing for lots of companies is that with kind of this increasingly digitalized world, lots of companies have had to make the leap from being makers of physical hardware and assets towards being masters of software and digitalization. That doesn't mean they necessarily have the requisite procedures and processes in place to deal with cyber hacking. It's not in their heritage. So cybersecurity has been a really big area we've engaged with. Another really important area recently we've engaged on has been human capital management. And what we mean by that is trying to ensure that companies have the appropriate procedures and processes in place to keep their workforce happy and motivated, because all things being equal, happy and motivated workforce leads to better company results. You want to drive productivity as a result of that. So we've engaged with our companies pretty closely to try to make sure that they have some sort of appropriate human capital management in place, and that varies by industry. I think one of the things you could say for an industrial company with a very large workforce of workers on a production line, it can be things like whistleblowing procedures to make sure that people can report malpractice in a way without any repercussions. Things like that can really boost morale. So it varies by industry, but engagement is a very important part of the process, and we've engaged with I think about 47% of the portfolio over the last year on various aspects of their ESG profiles.